Welcome back, Wealthleets. In today's video, I'm going to be starting a dividend investing portfolio with $1,000 because dividend investing is one of my favorite ways of generating truly passive income on a yearly basis, on a monthly basis, or a quarterly basis, as long as you hold the stocks that you're investing in. If you've seen any of my previous videos around my investing app reviews or my current accounts that I have with them, you know that I'm really passionate about building wealth and just getting into the stock market. And I have really wanted to start a dividend investing portfolio for a long time now, and I'm finally taking the plunge. You can follow along with me. I'm going to be creating an entire series surrounding this. In this video, I thought it would be really important to go over a few essentials when it comes to dividend investing. These include what exactly is a dividend, the pros and cons of dividend investing, and why I'm choosing dividend investing over other forms of investing such as growth investing. I'm going to be going into what to look for while dividend investing, and I'll be revealing the first stocks that I'm going to be putting into my account, which I'll be using M1 Finance to grow this dividend investing account over the next few years. I chose M1 Finance for a few reasons. I'll be covering that in a future video, but if you want to sign up for M1 Finance and get $30 free, you can sign up with the link down in the description. It helps the channel out, and it is an affiliate link, but it helps the channel out, and you get $30 free when you sign up and deposit $100 with them today. So as I mentioned, this is going to be the first video in a series of videos I'm going to be doing around building this account. My goal is to build this account to $100,000 within the next 2 years and to be generating over $500 per month in dividend income. The cool thing about this is I'm going to be documenting everything here on YouTube so you can follow along. And if you want to choose any of these stocks, I'm going to be going over exactly why I'm choosing these stocks and the stocks that I'm going to be putting into my portfolio over time. I'm going to be doing a lot of videos into specifically the types of stocks I'm going to be investing in and going over what kind of stocks that you should be looking at as a beginner, intermediate, or advanced investor doing dividend investing. If this is something that you're interested in, whether it's building your own dividend investing portfolio, or if you're here just for the entertainment, because sometimes I think I'm funny. This was a really fun video to film, and I hope that you get a lot of value out of this and that you're going to follow along with this journey alongside me. And if you do get any value out of this, please consider smashing that like button for the YouTube algorithm. This way it'll push the video out to more people and get more people into dividend investing during a time when dividend investing is going to be really beneficial. So with that, let's get straight into it. So what exactly is a dividend? In its very simplest form, a dividend is a payment from a company to the shareholders of that company. So when you buy a stock of a company, let's say Coca-Cola, for example, you become a fractional owner of that company, and therefore you are a shareholder. Yay, congratulations, you own Coca-Cola. Partly, there's 4 or 5 billion shares out there, and if you own one of them, you're 1/5 billionth of an owner of Coca-Cola, but congratulations, you now own a business. Now, when a company like Coca-Cola gets large enough, like they currently are, they've been around for a long time and they're very large, and they have a lot of profit annually, there's a few things that they can do as a company. They can either reinvest that profit and continue to grow the business, or they can pay out some of that profit to the shareholders in the form of a dividend. Funny enough, Coca-Cola does just that, and it's actually one of the dividend kings that I'll be talking about what that is later on. Now, if a company like Coca-Cola does pay that dividend, it's usually because they are in such financial abundance that when they pay that dividend, they're gonna be okay, right? They're gonna have profits left over. It's usually this, or they don't see any other positive way to reinvest that money into the company to grow. So it's better to just distribute those profits out to their shareholders, make the shareholders happy, and the stock price gets a little bump too. This is exactly why many of the dividend paying companies that you will be investing in and that I will be investing in are these large blue chip companies. So now that you have an idea of what a dividend is, let's get into the pros and cons of dividend investing and why I am choosing dividend investing over growth investing. So one of the most obvious benefits of dividend investing comes from the dividend itself. It's that passive income that I was talking about. And as I mentioned, dividend investing is one of the best passive investments you can do. Once you buy the stock and you are holding onto that stock, as long as you're holding onto the stock and they don't cut their dividend, you're pretty much going to be having income come in on a monthly or quarterly basis, depending on the company. Another benefit of owning a dividend stock is they have less fluctuation during a market downturn or when there's a lot of market volatility. And that's because dividend stocks tend to not grow as fast as the market does, or they don't, you're still getting that income when the market has a bearish downturn. So one benefit that I love the most is going to be the long-term compounded effect and the growth which it can have on your portfolio. Now, this is similar to the snowball effect that you'll hear many investors refer to. And basically this means that starting at the top of a hill, a small snowball that starts rolling down the hill is gonna start picking up steam, it's gonna start picking up speed. And as it grows, as it rolls down the mountain, it's gonna keep getting faster and faster and growing faster and faster. And this is the snowball effect that a lot of investors really attribute dividend investing with their account growth, because as you start to get more dividends and reinvest those dividends into your account, it's going to grow your account more and more. You're going to be able to invest in more stocks and more dividends, therefore increasing your dividend payout, therefore allowing you to buy more stocks, therefore increasing your dividend payout, so on and so on. So it really is a beneficial compounded interest growth. It's one of the best things that comes about when you start dividend investing. And many of the companies that I'll be adding to my portfolio and therefore showing you guys right here on this channel are what is known as Dividend Aristocrats, which means that they have consistently been paying out a base dividend and growing that base dividend for over 25 years. Now, there are a select few in this awesome club that is known as the Dividend Kings, which means that they are paying out a consistent dividend and growing that dividend for over 50 years. Now, there's not that many companies that have been doing that, but the ones that have are really good investment and are really good long-term investments and should just be added to anybody's dividend portfolio. Now, there are some cons when it comes to dividend investing, and the most notable one is that no company is obligated to pay a dividend. That means that if you're investing in a company for the sole reason of collecting a dividend and they choose to cut that dividend, well, you are not going to be getting that dividend anymore. And most of the time a company chooses to cut their dividend, it's because the company's not doing so well financially. They can't meet the dividend requirements or the dividend obligations. And usually the stock price will take a hit as well. So whatever you bought that company at, you might be receiving a negative return on your investment. So that's just something to keep in mind while dividend investing. There are definitely cons with that. Another con that comes with dividend investing is you're usually not going to get a lot of the growth that comes with companies that are taking those profits and instead of giving a dividend, investing back into the business to grow, you're not going to be getting the benefits of that growth stock type of reinvestment. So, if you want that, companies like, for example, Tesla right now, Tesla takes all of their profits that they're getting from people buying their cars and buying their products and reinvest that back into the business to scale up their manufacturing, scale up their design of their cars, and to make sure that they're providing more and more products and services in order to grow. That's what growth stocks typically do. Dividend companies are these large companies that typically don't invest into growth, and therefore the stock price does not go up as much as these other growth stocks and these smaller companies that are emerging and growing at a lot faster of a rate. So while I build this portfolio, there's going to be a few key things that I look out for while picking the stocks that I'm going to be investing in. And these are things that you should be looking out for as a dividend investor if you're going to be following along with this series. And I will say that one of the key aspects of dividend investing and ensuring success while dividend investing is to ensure that you are diversifying your portfolio. Now, what I mean by diversification is investing in companies that are in different sectors or industries. Now, this does a lot to minimize the risk of, being exposed to one sector. For example, if a company like Chevron, which is in the oil industry or the energy sector, if oil prices take a hit which correlates to Chevron's stock price taking a hit, a company that you might be invested in, such as AT&T, which is in the telecom industry or the communications industry, most likely won't be, at risk of that same kind of risk of the oil prices dropping and taking a hit. So that's why you want to spread out your investments across different sectors. Make sure that you have, your hand in a bunch of different buckets and that you're benefiting from all these different sectors. This minimizes the risk that you have inside the market and within one sector. Now, a few terms that you should know, basic knowledge around, include dividend yield. payout ratio, total return, and dividend date and ex-dividend date. So dividend yield is the most common term you'll hear related to dividend investing, which is the annualized dividend represented as a percentage of the stock price. Now, for instance, if a company pays $1 in annualized dividends and the stock costs $20, that's going to be represented as a 5% yield. Yield is useful as a valuation metric because it compares a stock's current price with historic levels. Now, another term that you should be familiar with is the payout ratio, and this is going to be the dividend payment as a percentage of the company's earnings rather than the stock price, which is the dividend yield. All right, so the earnings. And this is very important because a lower payout ratio means that the company is more likely to be able to continually pay that dividend. For example, several companies that I was looking at while making this video had payout ratios over 100%, which means that they're paying out more in dividends than they're earning. Now, companies that are doing this consistently can get into a lot of financial trouble down the line and might have to cut their dividend if it comes down to it. So keep that in mind. The lower this number, the better. Now, the total returns is the combination of the increase in stock price, known as the capital gains, plus the dividends paid. So this is where I was getting into. If you buy a company that is overvalued and the stock price goes down, but you're still getting those dividends, this is going to affect your total return as the stock price or capital gains go into the negative, but you're still making that income from the dividend. So the ex-dividend date and the payout date are actually two very important dates to pay attention to while dividend investing. The ex-dividend date is the date that you must own the stock before in order to be paid the dividend. Now, the payout date is usually going to come after the ex-dividend date, maybe a week or 2 weeks, sometimes up to a month after. But this is the date that you're going to actually be getting the dividend payment. You should always look into the dividend history of a company to make sure that they have consistently paid out their dividends and that they haven't missed any dividend payments, as well as continue to grow their dividends over time. This goes back to that list I mentioned as the Dividend Aristocrats and the Dividend Kings. They have consistently paid out their dividends, grown their dividends over a certain amount of time. So the moment of truth has come. I'm going to be going over what stocks I'm including in my dividend portfolio from the start right now with $1,000. I'm going to be doing this in my M1 Finance account and showing you exactly the companies that I'm going to be getting into. These are the chosen ones. These are the first ones, but these aren't going to be the last ones. Like I said, I'm going to be doing a lot of company analysis and adding more and more and more as I go along with these episodes in this series. So one thing to notice with all of my stock selection here is that I diversified this portfolio as best as I could. I made 5 different stock selections, but I also chose them in 5 different sectors. Like I said, you want to diversify across sectors to reduce that risk across sectors. So the first dividend stock that I'll be adding to my portfolio is going to be the International Business Machines, or what's known as IBM, most commonly known as IBM. Now, this company is in the information technology sector and has been growing relatively well in regards to its competitors and its industry, average, and has been consistently paying out a solid dividend yield year in and year out and growing them consistently year in and year out. This is something that, like I said, is very important when considering dividend stocks. So I'll be adding IBM to my initial dividend portfolio. Now, the second dividend stock that I'm going to be adding to my portfolio is in the communication sector and is actually going to be AT&T with the stock ticker symbol T. Now, this is a company that I've been following for a very long time. I've invested with them and traded their options on Robinhood for a few years now. They're a great company with solid dividends, always delivering on their dividends and growing their dividends. They're one of the Dividend Aristocrats that I mentioned earlier. They're just a really solid company in the communication sector, and I think that they can weather any kind of market downturn or bearish market that they're presented with. So AT&T, solid company. Let's move on. The third dividend stock I will be adding to my dividend portfolio is going to be from the energy sector, and that is going to be Chevron with the stock ticker symbol CVX. Now, I was trying to choose an energy sector stock that, was high in dividends, and the two that came up were Exxon, Mobil, and Chevron. Now, from the research that I did, I think that Chevron is poised to have a better market outlook and stronger future outlook when compared to ExxonMobil, who has I'm not saying that they won't have a, solid future, but they have a lot of lawsuits building against them, and Chevron just have a more solid outlook, and they're partnering with some hydrogen, companies to develop hydrogen fuel. So they're really, really good outlook, and they pay a really good dividend as well. So the fourth dividend stock I'm going to be adding to my portfolio is going to be AbbVie. Now, AbbVie has been doing really well lately because they are in the healthcare sector. Now, the healthcare sector, as you can imagine, over the past year has been doing really well and has been paying out good dividends for most of the companies. Companies like Pfizer, J&J, AbbVie, they all have really solid dividends. But I went with AbbVie because they have a really good potential in the future and a good future outlook as well. And I just like the way that they've been growing their, dividend over the past 25 years, paying out a consistent dividend over the past 25 years. And they're one of the things in my portfolio where I feel very, very confident about AbbVie's outlook in the future. So this is actually one of my most confident picks going into my portfolio right now. Now, to bring it completely full circle from my example I used earlier, the fifth stock that I'm going to be investing in is going to be Coca-Cola with the stock ticker symbol KO. Now, Coca-Cola has been actually paying out a dividend for over 57 years. They've been growing it every single year during that time as well. So they are a dividend king, like I mentioned earlier. Coca-Cola has really solid foundations, and they're a really good, profitable company who I don't see going anywhere in the short-term future or the long term. They're going to be around for a very long time. They've established themselves as a leader in the beverage industry, and this is going to be more in the consumer industry. So this consumer sector, and that's the 5 stocks that I picked. And of these 5 companies, the average dividend yield comes out to just under 4% at 3.981, which is really good for a dividend investing portfolio, considering you're getting the dividend investing plus you're getting the market returns. It's a solid strategy going forward to have roughly in that 3 to 6% range. Anything above that might be, a little iffy or red flag. Anything below that, you could probably get, investing into bonds or safer, investments if you want to go that route as well. So now I'm already working on the next video in this series where I'll be going over everything you need to know about M1 Finance and why I chose M1 Finance over other investment apps such as Robinhood or Webull. I'll throw that video right up here when it's completed and published, but until then, check out this playlist of videos that I've done reviewing all the robo-advisor investment apps. Until next time, stay wealthy, continue to build your wealth, stay safe, and thank you so much.